Welcome to The Way to Build Wealth. I'm Ethan Bloch, and I'm teaching you, like those shoulder pads, how to build some wealth. Welcome to the show. Friday time, breaking out some Francis Friday in the house. Good, I'm all tied up in cables. Welcome. So yeah, Fantasy Friday, that's what's up. Let's get right into it, shall we? I said today we're going to be talking about diversification. More specifically, we're going to be talking about diversification in relation to index funds. And I'm doing this for two reasons. One of which, it's actually quite important that you understand this. The second of which, we had a great comment and someone had asked about this. So I figured, if he's thinking it, other people are probably thinking it, but they're just not writing about it. So let's talk about it. The question basically went something along the lines of this. Is the table crooked? How about that? Is that better? I don't even know. The question basically said, Ethan, I checked out Vanguard, and it's a $3,000 minimum to invest in the S&P 500 index fund or the total stock market index fund. And he was like, that's a lot of money. How does that affect, my diversification of my portfolio? And I assumed he was wondering that because he's thinking to himself, wow, I have X amount of money, $3,000 is about 90 or 100% of the money I have, and I'm going to put that all in one fund. He thinks, you would think you're putting all your eggs in one basket. Well, conceptually, you are putting all your eggs in one basket, but it's one big ass basket. Because if you put all your eggs in a total stock market index, you own the entire stock market.
You own all the baskets.
All the baskets. Thank you, Tim. That's good. You own all the baskets. Easter in the house, and you're stealing all the eggs. You got everything on the Easter bunny. That makes no sense at all. Where was I? If you own an S&P 500 index fund, again, you own the large portion of the biggest companies in America, which make up the large portion of, the market capitalization of publicly traded corporations in America. And when you own the whole market, total stock market index fund or the S&P 500 index fund, those are considered to be extremely diversified. People always talk about be diversified, protect yourself. When you own the whole market, you cannot get any more diversified than the whole market, speaking specifically about a certain market. Now, if you're talking about total diversification, stocks are just one piece of that puzzle. Yesterday we talked about bonds. It's another piece of the puzzle. Another piece of the puzzle, commodities. Gold, silver, oil. You can even talk about timberlands, not the shoes of the rapper, but timberland, right? That's another part that could be diversification. There's a lot of different things. Houses, diversification. Stamps, I don't even know anything about them. Special coins, these are all different investments that can help you diversify. But, stick with something that you could know or more people, that there's actually markets, big markets in, stocks, bonds, and the such. I think I've talked about what I want to talk about. When you own an index fund, just understand you are giving yourself an intense, extreme amount of diversification. You would think, and a lot of people would think, if I only own, let's say, a total stock market index fund, a total bond market index fund, and one international index fund, that's only 3 funds. And they're thinking to themselves, I have all my money in 3 funds. That can't be smart. That can't be a good thing to do. And I think people think that because that's not sexy. It's not like, oh, I'm owning this, and you can brag to your coworkers and other people and your brother-in-laws or your friends, and you can say, oh, I've heard this, and I'm cool as shit. That's probably why people think it. But realistically, if those are the investments you were holding, that is all you need. That is brilliant. And I'm not the only guy saying this. If you're on the way to buildwealth.org, right over here, there's a video I put together. Warren Buffett's in it, who we're going to talk about coming up because I've been holding off talking about him. But Warren Buffett, world's greatest investor, depending on the year, second, first, or third richest man in America, he'll tell you straight up, the best investment the average person can make is in index funds. I'm just regurgitating that in a more entertaining format. So don't get scared away because they're not sexy. They're good investments, and you shouldn't feel like they're not. I hope that helps somewhat. That's all I got for today. Fancy Friday. I hope you enjoyed the jacket. And I would like to also say, so Our set's kind of sparse, and we got some really great items coming in the mail to spruce it up. Going big time style, not really, but it will look a little bit better. Thanks for tuning in. I'm Ethan Bloch, and I'm teaching you how to build some wealth.